18th of September 2024, right? Okay, so news events. Today, I think the important thing is coming up, the anticipated Fed meeting. And I'd like to discuss about rate cut speculations and market implications. You know, what could actually happen, what to look out for, right? So the Federal Reserve's upcoming two-day meeting marks a pivotal moment for the US economy, potentially signaling the end of a prolonged period of elevated borrowing costs, right? Market participants are closely watching as the Federal Reserve is expected to join its global counterparts in commencing a rate-cutting cycle. The primary question remains, how substantial will the rate reduction be? Because this is something that is getting more traction. If you've been watching the news yesterday on Bloomberg, on CNBC, you know, you have various economists, analysts, even you have the FOMC board members, they are just throwing, and they are like, some say, I want 20, it's better to see 25. Some said it's a preference to see 50, you know. So currently, traders anticipate a 25 basis point cut as the most probable outcome, but the CME Fed Watch 2 has shown a rising likelihood of a 50 basis point reduction. Now, just a week ago, the probability of a 50 basis point cut stood at 34%. If you can see from here, 34%, but it seems surged to 65%. So from 34 jump to 65, but it's still under the 70% mark. Remember that? Every time I've been saying 70 is a very strong probability, but this is not far away from that, to be frank. Okay. But then what does that create? You know, it's like right now the market is not very sure. Are we going to see a 25? Are we going to see a 50 basis point instead? Okay, so this sudden shift raises the question, what has driven the market towards favoring a more significant cut? So let's study what has crept up recently with the cons data. Now, earlier this month, the US economy added 142,000 jobs with unemployment at 4.2%. While these figures do not necessarily support an aggressive rate cut, the downward revision of the previous month's jobs data to 89,000 has introduced a cautious tone. So this is one, the downgrade, okay? Now, core CPI year over year remains steady. That's the point. It remains steady, and CPI year over year dropped to 2.5. However, the month-over-month core CPI rose to 0.3, which does not fully justify a 50 basis point cut either. This one remains steady, okay? So the thing is that core is something that we are looking at, not just the CPI year over year. You know, I want to look at the core. Core remains steady there. Okay, and that's the reason why it does not fully justify a 50 basis point cut. Now, as we approach December, you know, market pricing suggests that likelihood of a 50 basis point cut at one of the upcoming FOMC meetings. Now, this is what is shown. So that means we could possibly get 150 basis point rate cut in either September, November, or December, right? So this is what the market is pricing in. So some economists actually argue that the Fed may be preemptively cutting rates as a safeguard. If they do it right now, it's more of a safeguard, considering potential negative economic developments that could potentially happen between now and the November FOMC meeting. Okay? So as such, the market reaction will hinge on the scale of the rate cut. So the size of the rate cut will see some changes. Now, 25 basis point reduction would imply the Fed still sees room to maneuver on inflation and does not express severe concern about the labor market or broader economic slowdown. Conversely, a 50 basis point cut could be interpreted as the Fed's attempting to accommodate an economy in deeper trouble than anticipated, suggesting that the central bank might have delayed action for too long. Now, this perception of a 50 basis point cut might trigger a negative reaction from US stock market, as investors has been anticipating smaller rate cuts, right? So what this is like the normal situation, what is expected without the developments that we have seen in the last 1 week. Now, this time, however, the unusual division among FOMC officials who generally voted in unison on rate reductions between 25 or 50 basis points might see the stock market potentially react in a very different way. Okay, so this is what we expect in the normal times. But the last 1 week, things has changed so much. So we might see in a very different way. In a different way, how? Instead of 50 dropping, that it goes up instead. So at the end of the day, it's the perception that is going to come after that. So with this kind of, I would say, uncertainty, how do we going to deal with it? So luckily, we still have one more data to fall on. So as such, the dot plot should be used as a guidance together with the size of the rate reductions. This is something that is very, very important. The dot plot will be released also together. And dot plot, which is the future path of its benchmark rate, right? Will offer additional insights into potential rate decisions for November and December. Now, the stock market will weaken if the Fed projects a bigger total rate cut reduction for 2024 than before. Okay? So because this will show that the market is pretty weak, and with such, with such things, I said, oh, okay, then you would actually see the market correcting. So be on the lookout. Let's wait for the data that's going to be released later today. Okay.